turn it over. I will turn it over to you then. Are you able to share your screen?
Yes, I'm gonna share my screen now and go to my presentation. Okay, so again, my name is Greg McKenzie, and I am speaking to you today on behalf of Unicorn Unlimited Inc. Unicorn Unlimited Inc. is the family business. And just a little bit about me before we get into the presentation. I'm a second generation accountant. My mother was an accountant. She started the business when I went to kindergarten. She went to Nationwide Tax Service. And so when I was 5 years old, she started the business. The business last year or this year, which is at its end, turned 40 years old. And so basically, this is the family business that I have stepped into the position to run. My mother transitioned in 2020, and she's now working with me from the ancestral realm. So I got superpowers inside of the corporate formation space. But the bottom line is this is an accounting firm that my mother started 40 years ago and that we are continuing to run today. And so just to start off, a word about unicorns, because people would always say, even me, when I started to attend college, what does a unicorn have to do with accounting? And so it's really not about accounting when it comes to unicorns. It's about character. And so for my mother, she was a very mythical person, and so mystical person rather, and she believed that unicorns meant some very specific things. And she was very clear about what she was talking about when she was talking about unicorns. So not to be mistaken for the Pegasus, which is the one with the wings, but this unicorn of her ideal is the single horned horse with no wings, as pictured in the logo, and it represents good fortune, beauty, magic, and rarity. And so royal blue and green were her favorite colors. They then became the colors of the logo. And so these are the colors that sort of embody the ideals and the principles of unicorn. And so in doing accounting services, in doing business consulting, I strive to live up to these ideals: good fortune, beauty, magic, rarity, to make the service that we provide embody these like otherworldly characteristics. So I always explain that because some people may say, well, we can't take them seriously. If this is an accounting firm called Unicorn Unlimited, I don't know what work they're going to be doing under a name like that. So I just always like to clarify where that came from. So to get into today's or this evening's conversation, I wanted to list out the type of content that we would cover. So there's 4 key areas, and we're talking about corporate formation. Limited liability as a doctrine or an idea, I think, is an important foundation to explore and discuss first before even getting into the various types of formations that corporations take on. And then from our discussion of limited liability, we'll go into for-profit formations, from there into not-for-profit formations, and then after that, we'll talk about compliance. There are some people appearing, since I'm the co-host, to admit. Are you able to admit them, T, or do I need to?
Nope, I got you.
Okay, perfect. Okay, so about Unicorn Unlimited Inc. Again, founded in 1983. Okay, so I need to correct my initial statement. We'll be 40 next year. So that's good. I thought for a second, y'all, I may have missed our milestone. But so in the fact that we'll be 40 next year, that gives me something to celebrate and look forward to. But Ruth had an affinity for unicorns. Again, a symbol of good fortune. And the business primarily is accounting, taxes, and business consulting. That's generally the work that we do. In the last, I would say 15 years, we really sort of sharpened our lens toward a lot of work in the nonprofit sector, but we still very much work with private and individual tax clients as well as small businesses. So limited liability. Limited liability as a doctrine or a legal concept And I'm not an attorney, but this starts from a legal basis. And it's an ideal that means it comes from maritime law, meaning no vessel, no liability. So to bring that into modern terms and into the business world, the liability of an owner or an investor in a company is limited to the investment that they make. So when you start a corporate formation that provides limited liability, that means you're not personally liable for any damages that may need to be liquidated from a controversy that may arise from you doing business. So if you are baking cakes and someone eats a cake that you make and they decide that because of that cake, they got sick and they're going to sue you, and they win a lawsuit and are awarded a judgment of some sum of money, that sum of money will be limited to your investment in the business. They can't come after you individually or personally for your personal assets. Only what you've invested in the business or what the business holds can be liquidated to cover those damages. So limited liability is the bedrock and the reason why, corporate formation is done in the first place. The goal is to more safely operate in commerce where you're not exposing yourself to potential damage financially and otherwise from doing business. And so again, it's limited to investment. The goal is to protect the owners, but it's important to know that there are ways to pierce what they call the corporate veil. So this protection that you receive when you register a corporation or an LLC is referred to as the corporate veil, but that can be pierced and there are ways that can happen. But for the purposes of this discussion, I think it's just important to highlight limited liability is the basis around which this whole corporate formation thing is structured, is to protect you while doing business. However, you're not bulletproof. And so that protection has some vulnerabilities that you should be aware of. Okay. So in thinking about the different types of corporate formations, we'll start with for-profit formations. So under the lens of for-profit formations, we'll like review them in the context of what document is used to register it, what is the number that's assigned to it from the IRS, how is ownership held, what are owners called, what governing documents are needed to anchor it, and finally, what IRS reporting or tax reports will be required for each organization to remain in compliance. So for a corporation, the registration document is articles of incorporation. And so that's across the board, whether you register in Michigan or Atlanta or wherever you may be registering your corporation or LLC. It has to be done through a set of articles. And those articles make some declarations about who you are. They tell people the name, they tell people the duration that you wish to operate. Some entities only come into existence for a short period of time, meaning they'll operate for 5 to 10 years and then close intentionally. Other entities come into existence in hopes of operating perpetually. One thing about corporate formation is that when you start a corporation or an LLC, it has unlimited life. So limited liability, but unlimited life. So it can be passed down to your heirs and descendants through wills and trust documents. And so that's a benefit of it, but there's also the potential to limit that life, and that's all done in the articles. You also in the articles tell people why you exist. What was the reason that you formed it, the purpose? You also tell, and this is a public document, you also tell the registration body, which will be the state, but also the general public, who are the people that were involved in registering the corporation. Now, this is a part that can be an interesting conversation. In many instances, in my experience, people perceive the people who register the corporation as automatically being the owners of the corporation. That's not necessarily true. The incorporator of a corporation does not automatically designate ownership of the corporation. They could be an attorney. They could be a group of supporters who are helping people who want to register a corporation to do so. And in that way, be listed as an incorporator on the articles of incorporation, but have no real power or ownership in the corporation. So, but it's just important to point out that there's information that's captured about the people who are registering the corporation, but that's not the place where you look for ownership. But we'll get more into that later. Last but not least, there are spaces for you to make special designations about the corporation in additional articles. And this can get as complex or as simple as the situation might require. In the instance of corporations, they come into existence automatically with shares. So a general corporation that's starting out has the ability to, upon its initial registration, open with 60,000 shares of common stock. You can also designate classes of stock, common stock, private stock, or other special stock classes that you define for your purposes. But the bottom line is, these are the things that happen when you register your articles of incorporation. And again, those are registered with the state. Now, the second level of government that you have to check in with when you register a corporate entity is the IRS. And they will, at the federal level, then issue a tax identification number on an SS4 form, which is the second bullet, or as this acronym EIN is synonymous for employer identification number. So you'll see tax ID number, employer identification number used interchangeably. Now, just because you have an employer identification number doesn't mean you have to have employees, but this is just one of the ways that employees are tracked and connected to organizations through the EIN when you have an employee. Collecting taxes and other things like that are done through the use of the EIN. And it's a 9-digit number, just like a social security number. And so it's the business equivalent of a social security number. It's the identifying number from a federal level that's used to develop credit. If you were to get a Dun & Bradstreet report pulled, it would be anchored by the activity that's witnessed on your employer identification number. And so I like to say in many cases, the articles of incorporation are like the birth certificate, and the EIN are like, the EIN is like the social security number. And with these two identifying documents, you now have an identity for this legal entity that can enter into commerce, can own property, start bank accounts, have a credit experience that causes it to be able to have loans and other things like that based on these two initial documents. So one is with the state, the other is with the federal. Ownership in a corporation is held by shareholders. And the shareholder ownership is transferred to each individually through a stock certificate. So the stock certificate is the legal document that notifies people of ownership in a particular corporation. The stock certificate also denotes a certain value. It could command a certain dividend and other features the stock certificate has built into it, but it's the document primarily that an owner has as proof of ownership in a corporation. The governing document for a corporation is the bylaws. And the bylaws are, in general, a set of rules and instructions that are designed. There are boilerplate documents out there, but they're designed generally by an attorney or someone who's helping to form your corporation, like an accountant, that specifies certain levels of responsibility. and roles and duties and other key points of information that may be important for people to know. Now, the bylaws, unlike articles of incorporation, are a private and an internal document. People might request them, and then you can choose to give them access to see them if you want them to have that information, but you're not required. Generally, the outside world that requests bylaws from you are folks you're getting ready to enter into a big contract with, and they want to see the nature of your ruling structure, or they want to see who is responsible for being able to make certain decisions, or who's responsible for being able to sign off and have certain authorities in the company. All of these types of responsibilities and roles are defined in the bylaws. So these are instances where the bylaws might become something that you share with people, but this is very much an internal document. And it is the document, in addition to the stock certificates, that talks about ownership in a corporation, even more so in an LLC. Last but not least, in this category, the tax documents that you're responsible for filing as a corporation include the 1120 and the 1120S, which is simply the number that's assigned by the IRS to the form that you file when you're a corporation. So for individuals, most of us file a 1040. For business, it's an 1120 when you're a corporation. The S next to 1120 means a S corporation, and the S corporation is a type of corporation that we'll talk about in a moment. But just for the corporation discussion and the bullet points of how it's formed, what are the entities that need to be checked in with, how ownership is held, and the governing documents, tax forms, that's those bullets under corporation. Now, similarly under LLC, we have articles of organization. So you see, just like corporation, it's really only one change in the last word, because it's not a corporation, but it's a group that is going to be organized and going to receive this limited liability protection. And so that's the LL and LLC. That's limited liability company. The SS4, again, EIN that you get from the IRS. Ownership in an LLC is held by members, not stockholders. And members' proof of ownership is through a membership certificate. The governing document that is internal, that spells out all of the details like the bylaws for a corporation, is the operating agreement in the LLC. And an LLC could end up filing any number of returns based on how it's constructed. If it's a partnership, then it will file a 1065. If it's filed for the election, Form 2553 to be treated as an S corporation, it will file an 1120S. Or if it's a sole proprietor LLC or single member LLC, then it can be filed as a pass-through on the Schedule C. So there's a lot of conversation out there about LLCs and tax benefits and write-offs. And my presentation today is not about the taxability of these entities, but as a tax professional, I will caution you that write-off is a word that's used interestingly. The reality is you're accounting for the expenses that the business incurs during operating. It's not a situation where you're going to be able to take $10,000 in expenses or write-offs and add that to a refund. I've had people come to me and file a corporate tax return and expect to get a refund. Businesses don't receive a refund. Individuals receive refunds only if their income or their tax liability is less than the amount of taxes that were collected. Otherwise, businesses are not structured for a refund. If you file your LLC as a part of your Schedule C and you receive a refund, it's because of your personal, not the business. If the business was filed on its own, businesses pay taxes or break even. That's the only two options. So, but that's another presentation for another time. But I think I just wanted to put out there in the space, be careful about the amount of information that is out there about how LLCs can be used in ways to advantage you via your taxes, consult your tax professional. And if they, are not 100% sure about how all of that works, find somebody who is before you take some YouTube advice and go out and try some stuff that may not be well vetted. So at the bottom here, I have Form 2553 election. So whether you file a corporation or an LLC, if it meets certain criteria where it falls under the category of subchapter S, then you can file this election so that it can be treated as a pass-through, meaning you can file it on your personal taxes via your Schedule C. And so the Form 2553 will turn a corporation into an S corporation, and it will take an LLC and allow you to file an 1120S instead of a 1065 or something else. So that's what the Form 2553 election is for, turning either one of these into treatment as an S corp for tax purposes. So I said a lot on this slide, and I want to stop and probe for feedback, questions, or anything like that.
I got a quick question. Keto here. Oh, I was just wondering if there's, so LLC, it's basically, I mean, I guess my estimation for most of the folks in the group is like they're thinking about a small business, like either that being a farm business or potentially like a small like construction business. And you're saying, I guess just like if you had any particular advice as is LLC the best way to go for that, or if there was, I mean, and if you have advice on that or not, I'm not sure.
No, I appreciate the question. Is that it? That's what would be my advice as what's the best way to go for a small business?
Yes.
Okay, so thanks for that question, Keto. And I will answer it this way. So it depends on what you want to do. So the corporation gives you some additional tools that the LLC doesn't. And those tools exist around fundraising. So a corporation is a way that you can aggregate investors together and give them a way to invest with you in a very tangible and trackable investment tool that's well known and well understood by most people in the form of a stock, right? And so the LLC allows for people to invest with you as well, but it's a less readily identifiable amount of money that you can expect to get returned because it's a percentage based on your membership certificate. So if the pie is 100% and I'm keeping 51 to retain an interest in it that will give me the final say, I have the other 49%. It's difficult to quantify that versus I have 60,000 shares of common stock. I choose to release 25,000 shares at this dollar amount, and then as a result, raise this amount of money. So if a person is more prone to aggregating a group of people's resources together to do an activity, I think the corporation is more tooled for that. If you want the protection of the corporation, but with the simplicity of a sole proprietorship, then the LLC is more of the way to go. Because when you start getting involved with stock certificates and shareholders and all of that kind of stuff, that prompts other reporting responsibilities and things that don't come into play in the LLC format. So if you're just sort of in a small group or just one person or a few people working together to achieve a business goal, then the LLC might be a more ideal vehicle. But so it's not either or, right? It's a situation-based analysis that you have to make on your goals and objectives and the type of activity that you were planning to get into. Keto, did that answer your question?
Yes, perfectly. Thank you.
Okay.
Yeah, you have one hand raised from Jonathan. Did you still have a question, Jonathan?
Yes. Sorry about that. My question is, who do I go to if I have a corporation and I want to buy like stocks for per se, like if I want to buy like stocks that produce dividends, so I can basically help offset like my cost of my business as far as like, okay, we got rent every month for a building. Who would I go to in order to buy like dividend stocks under my corporation name?
So Jonathan, I want to make sure I understand your question. Are you saying who at the state registration level do you go to get additional stock for your corporation?
No, like let's
Okay.
say my company is JH3 Construction,
Okay.
Landscaping, Heating, and Cooling Incorporated. Okay.
Mhm.
Which you guys know my son, he took part in your program. My mom is Ida Castillo. Anyways, I want to buy under my corporate name, I want to buy shares of Ford that I know that pay out dividends every so often. So therefore my company can make additional money to
Okay.
help help float me through my times where I'm slow.
Got you. You're talking finance strategy.
Yes.
Okay. So, I mean, I would get with somebody in investments and securities. I don't have a referral off the top of my head, but anybody involved in investment, and if anybody here knows someone who's an investment broker, whose contact information they can share in the chat, that's who I would suggest you get with on that. And yes, finance strategy, when you have additional money in the bank account that is not needed to invest in other things so that you can get additional funds added to that money, that's better than what you could get from a bank paying you interest, is an ideal strategy to be engaged in. And so thank you for that question, Jonathan. Did I answer the question?
Yes, sir. I appreciate it and thank you.
Okay, you're welcome. So those two questions, I'm going to pause there on questions and go to the next slide. Oh, but let me say, the person here that I've pictured to the right, Mr. Big Deals, Reginald Lewis. I don't know if everybody's familiar with this guy, but he's the first Black billionaire. And I listed him there in the spirit of for-profit because he was all about for-profit. And he made large sums of money for the investors and the shareholders who were part of the corporations that he acquired and did his thing with while he was in the capitalist world. So I just put him there because he's an example of that. Now, not for profit, I'll start off with my visual here. This is a picture of the coming Detroit People's Food Co-op, which is anchored by the nonprofit agency Detroit Black Community Food Sovereignty Network. And so a not-for-profit company has very specific features to it as well. You will register similarly to a corporation. You will register articles of incorporation, but they would be specifically for domestic nonprofit corporation. You would have to get a tax ID number or an employer identification number on an SS4 form from the IRS. And the interesting thing about nonprofit corporations is that there are no owners. So unlike a for-profit situation where when the business closes, I'm left with $100,000 that I could split evenly between the 10 partners at $10,000 a piece. In the instance of a nonprofit, when the entity closes, I'm left with $100,000, that money needs to be donated to another nonprofit of a like or similar purpose, or either it has to be forfeited to the state until they find a suitable one to donate those funds to. So many of my clients who come to me looking to establish a nonprofit are not aware that there's no ownership. And that may influence their decision to be a nonprofit or not. But I always just like to point that out to people. Last but not least, in a nonprofit, there are bylaws and board of director requirements. And so bylaws, similar to the for-profit corporation, are the governing document that spell out roles and responsibilities, but they also are very specific about board of director requirements. where corporate governance becomes an extremely high priority in the nonprofit world, because you have to make a distinction between those who are running the day-to-day function and operation of the nonprofit and those who are there to oversee that activity and ensure that the nonprofit is staying on the course that was set forth by the founders. And so in the original documents, that the articles of incorporation will talk about the purpose and all of that, and also the application for tax exemption, if they choose that, will also talk about the purpose. The board of directors are there to make sure the purpose is being adhered to, that nobody is deviating from what the agreement of the group was. And so last but not least, the IRS Form 990 has to be filed for a nonprofit to stay in compliance with the federal government. So 990 comes in many forms. There's a 990 postcard for entities that don't take in revenue that exceeds $50,000. There's a 990 EZ that certain organizations qualify for, depending on revenue limits or various different kind of donor-based funds situations. And then there's the full Form 990 that has to be completed for, you know, larger, more complex nonprofit organizations. So that is like a snapshot of the not-for-profit world. There's no stock certificate ownership or anything of that to speak of, but there's a lot to talk about in the way of board of directors, management, bylaws, tax exemption, those types of things. The for-profit companies cannot apply for tax exemption with the IRS, but a not-for-profit company can. And the reason being is because 9 times out of 10, a 501c3 will be registered to carry out a charitable cause. And so since it's registered as such, then the government is adding this additional incentive that if people want to help the nonprofit to carry out that work, they can do so and have the donation that they give be tax deductible. So this is, you know, intended to help encourage people to participate in philanthropy and these social causes. So that's the not-for-profit space. Again, hearing that this may be a space where we're more so focusing on farming, small business, I just still want to open it up for any questions that anybody might have about the nonprofit before we move on.
Okay, G, this is one question I know me and you have gone back and forth on regarding the threshold for like paying directors. I know you've talked about this a little bit. So for folks on the call, outside of Keep Growing Detroit, I've also helped to co-found an organization called Black to the Land, where we're a board of directors, we don't have staff. And so we're kind of hitting that point where, you know, we're doing a lot of the work. And so there's a, you know, I just wondered if there is a specific threshold that you could call out, or is it more a matter of, you know, kind of theory and like, ideal, you know, situation, you have that checking requirements, or is there a specific threshold?
So corporate, good question. Thanks, T, for that question. So corporate governance becomes more and more important for compliance, depending on who from the outside world is inspecting and approving, or you're needing approval from in order to do what you're doing. Let me give you an example. Lewis College of Business was closed down for corporate governance violations. So their board of directors was deemed to be a non-governing board of directors, meaning they were willing to go along with what management suggested and not necessarily hold management accountable to the founding principles, purposes, and et cetera of the corporation. In that way, that caused them to lose their accreditation, that ultimately caused the school to close and us to lose the only historic Black college or university in the state of Michigan until Dr. Dwayne Edwards recently purchased Lewis College of Business and is working to revive it. But I'm saying that to say the outside world, the accrediting body, which I think is the North, you know what, I'm not even gonna try to screw it up, but there's an accrediting body that gives you your associate's, bachelor's, master's degree accreditations on a periodic basis. Upon their review, they felt that corporate governance was not in compliance, snatched the accreditation, which ultimately was the demise of the school. So it depends on who from the outside world approval is required to sort of buoy some of the activities of what you're doing. If it's a small nonprofit and there's not a lot of people looking at its structure and looking at the corporate governance, then you may not have as pressing a concern to differentiate. But if you intend for this to be scrutinized publicly, then it'll be a good idea to start to make some distance between those who are there to govern the activities versus those who are there physically doing it or managing the physical doing of the activities. So it's got to be a separation for check and balance purposes.
Thank you. Thank you. Any other questions about the not-for-profit side here? And I think you're going to go a little bit more probably, I think, into other stuff. But before we go, are there any other questions about this slide?
Okay, seeing no hands.
I'm sorry. Yeah. So are you saying to distance a certain group of people so they can be governance and then the other people are doing work? So are we still saying the governance team do not get paid? And the people, we are focusing on the people who are doing the work as in the pay people?
Yes, I would say that I
Okay.
agree with that statement. In general, the board of directors don't receive a payment. They serve for prestige, and that's a matter of corporate responsibility or professional responsibility. The people who are receiving a payment for doing the work are generally a management team.
Okay, clear.
Okay, thanks for that question. So compliance. Compliance is the key to this whole thing, because oftentimes I have clients that come to me and they register an LLC or they register a corporation, and then, you know, they don't know that they need to do an annual report now. They don't know that they just inherited the responsibility for an IRS filing as a result of this organization now. And so in a few years of not doing those things, they find themselves receiving letters, either saying that they are out of compliance or that they're going to be automatically dissolved for not registering their reports and all other types of things. So I always try to tell my clients after registering their business, you are now inheriting 2 new filing requirements annually. Whenever you start an LLC, you're required to file an annual report with the state of Michigan, and they'll send out a notice to you either via email or the address registered on your articles of incorporation or organization. You also, for a corporation, you're to do that report by May 15th. So it's February 15th for LLCs, May 15th for corporations. Both also then have an IRS filing requirement, which people are more clear about: taxes. If you're an LLC, you have to file those taxes by March 15th. The same if you're a corporation. But if you're a nonprofit, you have until the 15th day of the 5th month after your year end. For most people, year end is December 31st. But for those who pick a different fiscal year, then you have until the 15th day of the 5th month after your year end. So here I've just put 5/15 with a star next to it because it could vary depending on what your personal fiscal year end is. But very, very, very important. The state report, annual reports, are one category. The IRS tax returns, i.e. annual reports for 990s for nonprofits, are the federal filing requirement. But those two are the ways on a very basic level that you stay in compliance and in good standing. Are there any questions about this slide? Okay, so that must have been super straightforward. So to sort of recap, basically to form an entity, you register the articles, you obtain an EIN SS4, you figure out what's the proper governing document, and then you just keep up with the compliance reporting. And that's the basic recipe for doing that. Much of this can be done by individuals who have, some skills in looking up things, or there's a lot of information out there, and a lot of it is good and valid information. But you could also contact professionals who do this work, attorneys, accountants, and others who are in the business of registering these businesses, and could potentially save yourself some time too. So that's really like the whole bit that I want to get out. And now I want to talk about some specific scenarios. And so I know that there are people on the line here or on this Zoom meeting that have businesses and maybe want to know, based on where they are in their operating structure right now, what does it take to go from where they are to where they want to be? And like I want to explore some of those types of scenarios with you all.
I have some stuff to get us started in the dialogue.
Okay.
Can I share a screen that I have? Oh,
Yes.
go ahead, and if you want to take a picture of his contact information, here, put the contact information back up there,
Oh,
because
okay.
people may have additional questions. And
Sure.
then I'll switch over to some basic scenarios that I have heard. So yeah, take a picture of his email and phone number if you'd like. I just wanted to make sure people had a second to do that.
Sure. And there's more information online at our website and all that stuff.
All right. Okay. So let me screen share where I was at with okay, don't judge my crazy screen here, but I'm gonna go over here. All right. And let me do a slideshow. All right. Okay, so here's some scenarios to get the conversation started, and then we can also talk about some of the specific things that that folks are going through. So we'll definitely have time at the end for that too. So feel free to again jump in on these things. But so Greg is one of these people where I might have a scenario from a community member, they're going through something, and I literally will call Greg and say, what do I'm supposed to do in this situation? And he is always very generous with his time. And we partner in a lot of different ways. And so here's some scenarios that I have heard out in community, and we'll go through these, and I'll just ask your question, like, what would this person do? So here's my first scenario, and I call it the service provider, right? So there's 3 friends who have some carpentry and landscaping skills. They end up taking odd jobs around Detroit. Sometimes they help build raised beds. They've done a couple water catchment systems. They also plant some flower beds. One of the friends has a riding mower, so sometimes they'll, cut grass. They have one friend has a truck. They carry lumber over to somebody. So they're just kind of informally doing this and seeing the demand out there. So over the last 2 years, they have done about 10 projects for community members, and now they want to turn this passion into a legitimate business and market themselves as a service provider. What do you think, so given those entity formations and, processes for filing your articles of incorporation, right? I wrote down those 4 steps there. What would be the next steps for this group of friends?
So what the way the scenario reads, this sounds like a classic partnership LLC. And so again, you can form a partnership without it being an LLC just by creating a partnership agreement. But the LLC gives you that limited liability, which is a very useful feature to have. So I would advise these three friends to enter into a partnership, figure out first among themselves what do they want to split on the money to be. And that might be based on what each one is bringing to the partnership initially. It might be a 33 and a third split all the way across. So it might be a 50, 25, 25 if somebody has more of the skill or more of the actual equipment, in this case, the truck to carry the lumber or the grinding more. But when they, after they, make the decision to come together as a partnership, then at that point, I would see them do the LLC, sit down and create the operating agreement, and then the operating agreement sort of spell out the details of the partnership and how it could look. In addition to doing the operating agreement, I would also advise that they do a separate partnership agreement too. And a partnership agreement gets into more specific areas than the operating agreement, like what would happen in the event of the death of one of the partners, or how would new partners enter and under what circumstances, or how would they be, put into the equation, and all of those types of details can be spelled out. So, but yeah, this sounds like a partnership. And partnerships are tough. Like they make sense, and and people go into them, and it's like a relationship, like in a real way, where you're gonna hit some roadblocks. There's gonna be some differences of ideas and perspectives that may require some very careful work in order to grow through that and strengthen the partnership. But partnerships are also a great way to make use of each other's talents and skills and fill in each other's missing pieces while sharing in the commonwealth that we can generate from some work.
All right. Any questions about this slide? Anybody in this scenario, or have questions about what they would do in this scenario, or specific things they want to pull out?
It's a great scenario. I was it just makes me think of, like, in an informal situation, like, what is, I guess, like, once you start an LLC, I'm just curious, like, so you got to stay up on the filings like you had mentioned, or like reporting. Is there any kind of yearly fee to keep the LLC alive, or is anything, like, say you do, me and my crew are in the scenario that T put together here, and then it's winter time, and so, like, we're quiet for 6 months, and then one of the guys wants out, and then you got to revisit all those agreements kind of that you were talking about. But is, like, I guess, just, is there any, I guess, just to know is there reoccurring payments, and then if we decide that it wasn't working out, do we have to dissolve it, or is it just, it can just kind of hang out there and doesn't, if we're inactive as a crew for a couple of years, but then we bring it back online, is it like, are there any consequences to that?
Got you. That's so there's a couple questions in there. And the first one I'll address by saying there is an annual fee to file your reports, $25 for an LLC if you file on time. But if you're late, they have no problem adding a late fee to that. And it could be up to $50 to $75 for that year to file. But it's weird. Sometimes they charge a late fee, and then sometimes the state of Michigan won't. And I've seen clients who've had 3-4 years delinquent annual reports and not have their business automatically dissolved. I've seen people go 3 years, which is the limit, and instantly on clockwork, they're dissolved. So I don't know how that determination is made. I think it's kind of like a individual working, and maybe some people are paying closer attention than others and whatever's happening, but there's really no rhyme or reason of how they dissolve some and not the others. But there's certainly that annual fee of $25 that have to be paid. So if you have a partnership and then some people drop out, right, and you need to revisit the nature of the partnership, could be, let's just say there's a scenario where there's a partnership of two people, and then one person doesn't want to be a part of it anymore. So now it's no longer a partnership, really, right? Now it is a sole member LLC. And so when it changes to that degree, there are documents that need to be filed with the IRS because they're going to be looking for a partnership return from you, but you're no longer a partnership. So that's no longer the proper tax form for you to fill out. There's a document that you send to them explaining that there was a change and that this is now the form that they should look for from you. And then so when you turn it in, they don't reject it. So yes, in addition to needing to revisit those agreements, you also in certain instances have to change the type of tax form that the IRS is looking for. And so they figure that out when you register for your tax ID number. They ask information. What kind of company is this? Is this an LLC, corporation, whatever the case? If it's an LLC, how many members are there? Is it a sole member? Is it multi-member? Based on your answers to those questions, then they say, okay, this is the type of tax form that we're looking for you for every year to file, and this is the day that it's due, et cetera, et cetera. That's all a part of that SS4 letter. But if things change in a way that it changes the type of tax form that they should be looking for, then you have the responsibility to notify them. If you send in the incorrect information on the incorrect tax form, they'll reject it, potentially penalize you, and all of the rest of that. And saying all that to say, they'll be very forgiving if you send a letter and explain that you just didn't know, and they'll wipe the penalties at least the first time around. But to avoid using that get out of jail free card, because the IRS will take your penalties and interest off the first time around, generally every time. But the second time, you have to have a really strong case. So to avoid using that until you really need it, ideally you notify them that you made a change in structure that signal to change the tax return.
And could you notify them in your annual report, right?
No, so for the IRS, okay, two things. The annual report is going to the state. And so that's the state compliance document. The IRS is looking for the tax return annually. But they want the tax return on the proper form in order to, reconcile your tax account. And if you turn in a partnership, but you no longer have two people in the business, then they'll kick that back and say, this is not the right form. You should have done this on either your Schedule C or on an 1120S or whatever the case may be. And so in that space, I'm referring to notifying them. There are documents, and most tax preparers are familiar with this. There are documents that you can fill out and just send into the IRS, and it changes the tax designation that they originally set up for you when you registered your tax ID number.
Okay, so I was thinking like with the co-op. So I'm on the board of the People's Food Co-op that you mentioned earlier. Like, so when we change directors, like, so we got to do president. So when I filed that annual report, I had to indicate that on the annual report to the state. So I guess with the LLC, would it be like, would you indicate changes throughout the year in that same way?
So you have, with the LLC, you have the ability to, in your annual report, indicate like the address change, with the one that's registered with the state, the address change and other stuff like that. But it's only a one-time during the year thing. Mm-hmm. And any other change that you have to make. So they charge you for the annual report, and they allow you to make changes anytime, but it's always a fee when you register a change of address or a change of purpose or a change of whatever, when it can be done on the annual report that you have to pay for anyway. Mm-hmm, mm-hmm. Did I answer the question?
Yeah, basically you can make changes on the annual report and kind of some changes depending on.
You can make some limited changes. The changes are limited to address, they're limited to registered agent, and that kind of thing. and let me say this about registered agents, because a lot of people also have the misconception that the person whose name is on the LLC as the registered agent is the owner. Sometimes that's true, sometimes it's not, but the registered agent doesn't, the name being in the registered agent position does not make that person the owner or any kind of responsible party of any consequence for the LLC. It's simply the name that's on record for a mail to be delivered in the name of, in care of the organization, because they know the organization is not a real person. So there has to be a real person who is receiving things on its behalf. But that's really all the registered agent is there to do, to establish residency in that state and then operate as an agent on behalf of the LLC. But they don't have any power other than that, unless they're also something else, the CEO, the president, or whatever the case may be.
Okay. Okay, well, thank you for those answers. Any other questions about this scenario before we move on to scenario
I have
number 2? Go ahead, D.
I have a quick question, sorry. So what would be the difference if this is a worker cooperative? Would there be any difference in paperwork if they were a cooperative, or would it be the same as the limited liability partnership?
That was a good question.
Now co-op, let me say this. So I'm not a very specialized corporate formation co-op person. So there may be some people who are better to ask that question than me. But it's my understanding that co-ops have an agreement that they put in place that causes it to be treated cooperatively, the governance and all of that. And back of it is either an LLC or a nonprofit or something, but it's that co-op agreement that sort of causes the special designation of the co-op and the functioning that comes from that to come forward from the operation. So yeah, I don't know that I would have the answer to that one.
Okay, thank you.
Okay, no problem.
Okay, I'm gonna move to scenario 2 unless there's any other questions. Okay, scenario 2 is the product maker. So Miss Lucy has been growing herbs in her backyard. She got lavender, she got thyme, she got all these herbs. Her and her granddaughter has started to create products out of the herbs. They make soap, they make tea blends. She mostly gives them away to friends, but everybody talks about how great they are, and that she should sell them. So one day she gets a booth at the farmer's market and she sold about $300 worth of products on the first day. Now the granddaughter and grandmother team want to create a formal business out of their herbal product line. Where do they start?
Yep. I mean, it sounds like another classic LLC. Let me see. She started mostly giving away to friends, but everyone raised this. So I would do an LLC, but I would also share that this sounds like the kind of business that would attract investment. And so because of that, I would also consider potentially doing this as a corporation, a small corporation, because if everybody raves about how pleasant her products are, and it seems like she's got a lot of interest from the community, she might be able to, get some good investments and scale her business faster. And then maybe make some other people some money along the way who believe in it. So yeah, I mean, just for the sake of the possibilities on the table, I would advise this group to look at a S corporation and registering with 60,000 shares of common stock, determining a value for what those 60,000 shares are worth, and maybe making, some number of them available to people. If she's able to figure out that if I just had $20,000, I could do all of the goals of making this a profitable business and being able to pay a salary to my grandmother and me within a year. they were able to figure something like that out. And she was able to say, okay, I got shares of stock for sale at $5 a share and sell 4,000 shares of her stock, raise $20,000. She still got the other 55,000 shares of stock that she owns and controls. And now she has a $20,000 in working capital to produce this product and scale it and become profitable. Take on these partners, let them make dividends on their investments along the way. And, you know, so that's a way that scenario 2 could play out, just to not keep using the LLC vehicle.
Okay, just a different example. We could do LLC, but this is a different example. So in that, like, just curious, like so would you have an accountant like figure out your dividends and stuff like that, or would you, like, how does that work?
So basically on the stock certificate, they would designate how much they wanted to pay, what percentage of profit they would be receiving based on the split from the dividend. So in this instance, if they sold 4,000 shares of stock, and I misspoke because I said they would still have 55, they would have 56,000 shares of stock left. And so in that way, you would just proportionally share profit based on ownership. So that those 4,000 shares, each person has some amount of profit coming to them based on the profit that the business receives as a dividend. And there's a number of ways that this can be structured and figured out. But in the simplest way, it would just be profit sharing. There could be percentages. It's whatever deal one is able to strike with the investor in return for the investment.
Okay,
So it
got me thinking.
it opens up some space for creativity, and as long as both parties involved feel that they're getting the deal that they need, and they could agree in a number of ways of how
They
that
could say like you'll get X number of samples of tea or something like that as a shareholder, something like that.
They could do that. They could say, we're willing to share out of 10% of the profit. We're willing to give you your share of that based on your ownership in the business, because the other 90 we reinvest in until year 5 when we reach this goal. Or, I mean, it's so many different combinations of ways that could be figured out, but the shareholders are now in ownership, and there'll be meetings that the shareholders can give ideas at. Now they have a vested interest in seeing this thing be successful. So you got other people who are pushing the business because it's their business too. And, for that, they get a return on their investment until either they, choose to sell their shares back or, sell them to somebody else.
That is so interesting. I guess I always thought that was like very, very complicated. Are there any questions about this scenario?
Yeah, and I'm glad you said that, Miss Lady, because it sounds like really complicated. I'm kind of in this scenario, but when you got to talking that dividend share stuff, it kind of made me nervous because my garden is small. So when you get to talking big like that, it kind of make me feel like I need to back down. Maybe I'm not big enough, or like what do that, you know what I'm saying? This type of talk kind of make people nervous when you try to jump out here. I've been
Sure.
studying about the LLC, and like you said, I've been watching the YouTube and stuff, and it listening to you make me more secure. So in doing this, I do soaps and teas and stuff like that, and I'm also uh, uh, like an artist. I make glass pieces, glassware, decorative stuff, and stuff like that. So how would I get all that incorporated in the business? You know what I'm saying? Like just not just soaps and teas. I'm like a variety type of business. So what would you, does that matter going under the LLC
Oh,
or corporation? Like, how do you explain that?
sure. So let me first say, yeah, dividends,
Yeah, I
interest,
just started
profit
shaking. I just
share.
started shaking. Ooh,
That's what I'm saying. Those it's just words. It's just words. It's just words. And they have meanings that we could get real specific about. So um don't let that discourage you, because if you have a platform that's good for raising money, then the S corp and those, having stocks could be a good way to do it, an easy way for people who like to invest to understand what you're doing and then jump in with you. But saying all that to say, having multiple business activities under one LLC is not necessarily a bad idea, especially hearing that they're all like creative endeavors. It's not like, okay, so I'm hearing on one end you got garden and farming, and then on the other end you got creative, maybe handmade, arts and I don't want to say arts and crafts, but a crafts type business in addition to
yes,
the farming. Is that right?
yes,
Okay, so yeah, they could exist under the same LLC. They could also be under separate LLCs. It's really a matter of preference. If you feel that you would do a better job of tracking it separately, then I would encourage separating. But you could always have, what's the name of your business?
versatile creations. I know you
So
didn't forget about me, Greg.
it sounds like they, huh?
I say, I know you didn't forget about me. Go ahead, go
No,
ahead, go.
it sounds like they all can fit under that LLC,
Right, that's right.
versatile
Okay,
creation. And you can have an area where you're dealing in food products, the food part of your business, which will have very, specific types of accounts, specific types of expenses that are associated. Then you would have the manufacturing part of your business where you're creating a product from scratch and or buying products and then enhancing them, or however that model goes. And then you will have that part of the business which has its expense, but they don't necessarily need to be in a separate container, although they could. So it's like advice about which way is the best way really leans back into what's easier for you or what would make it better for you. Are you someone who would like it better if it was separate? You think you can manage it better if they were two separate businesses? Or is it okay for them to be under the same business, separate inside of the same business and still not get confused about what's going on?
absolutely. And you saying if I would be able to manage it, which means making sure those tax papers and everything is assigned. If I'm having two businesses, that means two different tax forms at the, okay, absolutely. I see you shaking your head. Okay, got you.
So you will be doubling your filing requirements and all of that kind of stuff. But there are times when it's feasible to, or I wouldn't say feasible is the word I'm looking for. There are times when it's advisable to do that. In this
Right.
instance, I don't know that you really need to, and I'm saying that you could if you wanted to too.
So could I do it in the future if I decided to break it up?
Yep, at any time.
Okay,
You can
good job.
make a change at any time.
All right. Thank you.
Mhm.
Thank you for those questions, Sandra. Any other questions about this one?
I have a question. If they are going to, I guess if they're creating a more formal business plan, is it okay that they're still growing in their backyard and they're still working out? It looks like they're working from home. Is that still okay with a formal business? Or
Oh,
do they
sure.
need to find a location to actually go? They have to find a location to actually grow and create products.
No, no, no. You can have your home as your business base for your LLC corporation or whatever the case may be. That doesn't the location doesn't prohibit the type of structure that you choose. And some businesses, do better from home versus in a corporate or quote unquote formal place of business. So yes, I would encourage people
Okay, so that would still be considered OSHA compliant?
So now we're talking about OSHA. Now that's a different ball of wax. I'm not abreast of the OSHA rules and regulations. So but as it relates to the LLC or the corporation, them registering it or choosing to be either of those and having a home-based business, the home-based business doesn't impact that.
Okay.
Yeah, and there's one other kind of layer on that is if you're doing a food product from home, there are the cottage food laws that regulate that industry at home. So you have to label it under a certain threshold. So just wanted to say that just for the good of all. Okay, all right. If there's no other questions on this one, we can go to scenario number 3. All right, you still with me, Greg? You good? You
Oh
good
yeah,
to
I'm
go
good.
through? Okay, we got 2 more
I have a
scenarios.
question.
Sure.
I'm sorry. I have a,
Yeah, sure.
so
Go ahead.
because we're in the food industry and we are growers, does that mean that we have to ourselves stay on top of any extra classes to remain certified so that we can grow? Even though we have an LLC, we still have these other responsibilities as food growers. We would have to be able to maintain those other licenses, like the ability to sell, is our farm, what is that? When you have to have a stand where you're already ready, set up so that you can have clean produce going to the market per se. Like I know
Yeah.
some farms have to go to that type of certification.
You talking about like GAP certification? And
Yeah, things like that that might not be included that we still have to remember that we have to do while we're
yeah,
still filing for our businesses and stuff.
yeah, that's a great question. So the GAP certification only would really be required if if the entity that's purchasing from you is requiring it. So usually that's like large grocery stores, you know what I mean? But like a farmer's market, you wouldn't necessarily need to be GAP certified, or like a CSA box, where you wouldn't necessarily have to be GAP certified. If the person who's purchasing says, I want you to be GAP certified, then that's when you need it. And that usually happens at like a larger volume, so
Okay,
and
thank
then when
you.
when you're making food products at home, you do need to follow those cottage industry laws, just for food safety and all of that. So, but yeah. Okay. All right.
Okay.
All right. Thanks, Mama Salima, for that question. And all right, so here's another scenario. There's a husband and wife team. They have a garden and they homeschool their children. They are always in the garden, and soon many of the neighbors come out to enjoy the space. Over the years, they decided to start a neighborhood garden club, and they want to teach youth about gardening twice a month. Now they have like 15 youth who come regularly, and they want to legitimize themselves as a business. The wife is concerned about liability if any of the children get hurt. So she wants to limit that risk. They would also like to make a little money to have some supplies for the garden club, and treats for the youth when they come by. They would also like to pay themselves for their time organizing this club. How do you suggest that they would get started as legitimizing their business?
So this is a great case study for a nonprofit organization or an L3C. And when I was talking about the different corporate forms, I didn't mention the L3C, but the 3 L's are limited liability, low income company. And so the L3C is like it's a hybrid between nonprofit and for-profit. You can make a profit, but that can't be the only objective of the company. You have to have a social cause as your reason inside of your organizing documents in order for the state to register your business this way. This one, would limit as being a nonprofit corporation, they would be, again, limiting their personal liability because the children would be interacting with the corporation. Because even though you register a corporation as a nonprofit, domestic corporation is still a corporation. And so the liability of those who are operating it is still limited to the extent to which they have a material investment in it. And in a nonprofit, there is none at all because there's no owners. So the children would, they would carry some insurances and things to sort of like help deal with the I don't know, liability of the children getting hurt. So let me give you an example of a nonprofit in a way that I see them deal with this. Like they have a martial art, there's a martial arts school you all may be familiar with called Alkebulan Village. Alkebulan Village has insurance specifically for children to participate in martial arts because it's a good chance that kicking and punching at each other, they will end up kicking and punching each other, possibly get hurt, and possibly there could be some damages from somebody getting hurt in this way. Luckily, over the 44 years that I've been aware of, there haven't been any of these types of instances, but there's insurance that they carry to ensure that in the event that something like that was to happen, that the general liability of the children is sought after. So, but the nonprofit, I think, would be a good way of organizing this. The L3C would too. Now, some people might say, well, they want to sell things. They also want, I can't see what's over here. They would also like some money to buy supplies for the garden club and treats for the youth when they come. Okay, so this, I thought I heard something about them selling things. They just want to be able to have some money to buy supplies for the garden club and treats for the youth when they come. So since this is educational based, I think that was a central concept to this. The children are learning to garden. Yeah, this is the classic nonprofit.
Yeah.
And then they
And
can
one thing a lot of people ask me about is like paying yourself as a nonprofit. I think people assume that if you're a nonprofit, you can't pay yourself, even though we have a lot of nonprofit people with salaries and stuff like that. So can you speak to that a little bit?
Sure. So, I mean, the nonprofit is just saying that you can't have a profit that you split with owners of the business because there are no owners. So, but if there's money left over from the revenue that you collected after you pay all of your expenses, then that money is just unrestricted net assets for you to roll over to the next accounting period or the next year. So while there's no technical profit, the additional funds left over from the operation stay in the business and are at the access and use of the business. And you certainly can pay yourself a salary. It just can't, go past certain limits. And I don't know those by heart, but we can, if anybody's interested, you can let me know and I can find that information out and share it with you. But there's certain limits to the amount that you can pay yourself as an executive in a nonprofit, but you can pay yourself. And you can also sell things. I thought I saw sell things in here, but that's not in here. But even though it's not, as
That's
a
a common
nonprofit,
question too.
yeah, as a
Like, can you sell
nonprofit,
T-shirts and stuff like that?
absolutely, you can sell products as long as they fall into your nonprofit purpose that's registered on your organizing documents. Rachel has a hand up.
Hey, Rachel, I didn't see you on here. How are you?
I'm good. How are you, Tafira?
Good, good.
So, Gregory, this sounds kind of exactly my question that I was going to ask in scenario 2. So for scenario 3, let's say the nonprofit would like to sell things that are associated with the educational garden. And then do they need to apply for like a business license or marketing license for that? And I have a follow-up question after that answer.
Okay, so provided that the selling that they're doing is connected to the educational garden, they don't have to do anything special in order to start engaging in that activity. Having the nonprofit and having registered it to carry out this social purpose gives them the platform to be able to offer items for sale. And then once they sell those items and recognize that revenue, they can then use it, to finance the nonprofit's purpose and cause.
Okay, so then it would behoove the nonprofit to make sure that all of their humanitarian efforts or their, what did you call it? A cause? What was it that you file with the state to?
So in your articles of incorporation,
Right.
you give them your nonprofit purpose or
Right.
yeah.
So let's say the nonprofit has their education garden or like community facing garden, and then they also have their market garden. If they incorporate their purposes and their educational components in that market garden, can they still sell out of that market garden under the nonprofit, or do they need a business thing
Gotcha.
for that?
Yeah, so now we talking strategy, right? And so there's always gray between the black and white, right? So technically, it sounds like we're seeing how, if it's possible for the overlap of the market garden that comes out of an educational garden activity to be treated as nonprofit income and used to pay for the activities of the nonprofit. So as long as the market garden is truly feeding its resources back through to the nonprofit cause,
Sure.
then it is in fact, just using the fact that it has produce to sell as a side effect of the education that takes place in the garden.
Correct.
To finance. And so in this way, it's a self-sustaining nonprofit. And
That's
there's
the goal.
nothing right. So there's nothing wrong with that. It's not like
Okay.
you're saying you have an educational garden, but you're really just producing a bunch of stuff. You and a bunch of pro farmers just going hard, making all kinds of produce, making it available to market, selling it, making all kinds of money, and then going back and doing it again, not really having education, not really financing programs, using the money that comes from that activity to finance the programs and the cause of educating the children and gardening, then
that becomes like a sticky situation. That's hard to, yeah.
That would be the situation where you're now needing to do something separate with that business and maybe, something different with the children's education part. But as long as that's all that's happening, is you're actually really taking the market garden money and financing the nonprofit activity, then I would say that this fits the category. And in fact, this is what is being asked of the nonprofit community by the philanthropic community. In what ways will this activity become self-sustainable? In what ways will it no longer be relying upon donor-based funding for the children to receive these activities? And so having the garden be able to provide that creates a strong case for people to give you some seed money, and then you all be on autopilot.
Literally seed money. So you said a fabulous phrase, and I didn't get a chance to write it down. You said growing for the purposes of, do you remember what you just, it was like, okay, it was establishing the case for having a sustainable model where your market garden has the nonprofit activities in there, but also all that revenue goes back into the nonprofit work.
Right.
So you would have to do your educational or nonprofit work, both in the community facing and market garden, in order to keep everything under that nonprofit.
Right.
Okay.
And even I would even envision like some of the youth who are being educated in the community facing garden to come out and work in the market garden so that they are, participating as an extension of the real nonprofit purpose.
Oh, so then graduating from like a volunteer capacity and a learning capacity to like an actual green jobs capacity, and that still counts as nonprofit work?
Oh, absolutely. Because because the money that's coming from the market garden is going to
Is
go
paying,
back to
right.
the first garden, which gives birth to the market garden and the youth who are coming to the second garden.
Mhm. As long as your profits for the garden aren't more than your expenses or something like that, like, what I'm
So,
trying to say.
and even T, if there's more profit than there is expenses, as long as, and let me put it this way, because nonprofit, we have to not use the word profit. If there's
Mhm.
more revenue than there is expenses, the surplus then just has to be reinvested into the nonprofit activity.
Right, there's
Okay.
just no sharing with profit holders.
Right.
It just goes, instead of bonuses, it goes back into the org, so that way you have monies for the next year.
Yes,
Right.
Okay,
yes.
Right.
thank you, Gregory, appreciate you.
Sure, no problem. And just to share out a real world example of that, again, I'll lead back into our Keebalan Village, which is martial arts at its core, right? And so there are people who pay for martial arts lessons, but those monies that are paid, they could easily be a martial arts school that's just all they did was have students come in, pay instructors, and then just made money off being a martial arts school. But the martial arts is an educational character development program that is used to carry out a social purpose. And so from the money that's made from the martial arts activities, that money is then reinvested in the other programs and activities of our Keebalan Village, causing that seemingly for-profit activity to, feed the nonprofit cause.
Yeah. Same with Keep Growing Detroit. We absolutely are making money off of our produce and memberships and all of that. So that was a good dialogue. Thank you, Rachel.
Yeah, thank you,
And
Rachel. That was good.
Thank you, Gregory, I learned so much and appreciate it, that was great.
It's my pleasure.
any other questions about this scenario? This is the non-property scenario. All right. Okay, I got one more for you, Greg. And then if there's any lingering questions after we've been through all of that, we'll definitely save time for that. So the last one here is the actual farmers themselves. So we have two old friends. They purchased 5 lots together out of their own money. They developed a slamming urban farm. These are actual farmers in our community. You may recognize
And I
them.
know some of these. I know these faces.
Yeah, that's Andy Che over at Fisheye Farm. They have accumulated assets for the farm, such as tools, a shipping container, and a wash pack area. At first, they were just growing for themselves and the community, but they started to have more produce than they knew what to do with. They started selling their extra produce through our Grown in Detroit program. Shameless plug there. And then to some local restaurants. With the money they make at market, they were able to employ 2 people from the neighborhood to help at the farm. They're paying them cash under the table right now. They're looking to formulate their business. What are their next steps?
So this sounds like a partnership, a classic partnership, LLC. And I would have them to do the 1065 and then do the Schedule F part of the 1065, which is the part of the tax return that's for farmers who are or individuals who are engaging in a farm-based business. There's a way where when you do your 1065 return, you can do the Schedule F attachment that goes with that and take advantage of the special expense treatment and some of the special income treatment that's available specifically for farmers. But yeah, that's what I would envision this group doing, a partnership LLC, and making sure that they took advantage of the Schedule F at the end of the year.
Mm-hmm. All right, and they have some shared assets. They have land, tools, Any special considerations for those assets that they
Yeah,
brought into the business?
that's a good point that you bringing that up. So the 5 lots that they purchased together, I'm assuming they had them in their personal name probably
Mhm.
initially, or maybe when you say they purchased them together, and I know it's a scenario,
Yeah.
right? So it's not
So
like
it's in someone's name. Yeah.
yeah,
Assume it's in somebody's name.
so it's not in their names collectively now.
Right.
Um, so if they felt that they were confident in the partnership, I would encourage them to transfer the lots to the partnership LLC once it was created, so that the LLC would hold the land. Now, if they wanted to retain the lot separately, they could do that too. And then they could rent the lots to the LLC.
See, now
And
that part right there.
right. And
That's a
so
lot there.
in that way, they could monetize the lots, in another way for themselves separately as like a real estate holding. That because if this farm business needed lots to produce its growing on, and they didn't own it, they would have to pay rent to somebody. And so that would be an expense of the business that they could justify and have a separate business where they make money just off of the rent of the lots that they own, that they allow their collective partnership to pay rent to in order to grow food.
Okay, so
But
in that case, they would need to set up some kind of contract with themselves.
yeah, it would have to be a lease. So if, let's say, if the farmer, so give me one of their names.
So that's Andy right there on us.
So if Andy owns 2 of the 5 lots, then Andy would create a lease between the LLC and Andy for some price of rent that is to be paid, right? Because Andy is who owns the lots. And then the LLC would then pay that to Andy, and there would be an expense of the LLC that would be dealt with in their accounting records and ultimately on their tax return. But the lease would be the contract that connected the LLC to the land and, dictated the terms of how the payments and all of that should go.
All right, and then can you also speak to paying people under the table? This is common. Issues
What
with
is that?
that,
What table are they paying a month? What kind of table is it?
you know.
That's always so funny to me. So are we talking about cash payments? Are we talking about payments without taxes being withheld?
Payments without taxes being withheld.
Okay,
Yes.
so if they're paying people, including themselves, without withholding
Oh, and I should
taxes,
say, I'm not actually talking about fisheye. This is an example.
got disclaimer. So if they're paying other people and including paying themselves, but not withholding taxes, then they want to make sure that they have an independent contractor agreement with those people and a W-9 on file with them, so that they have the proper documents in place to sort of govern that relationship.
So what does that look like when you're paying yourself? So
if even if they're paying themselves, that it's not Andy who's paying Andy, it's the LLC that Andy's a partner of who's paying Andy, right? So you create the independent contractor agreement between the LLC and Andy and designate what that payment would be, whatever the terms of the contract are. Andy signs a W-9, keep that on the files of the LLC. And then when it's time for the end of the year, a 1099 is sent out to Andy for the accumulated total of what's been paid out to Andy. And the expense of
what's the
that.
deadline for your 1099?
1099's got to be out to the people that they are supposed to be sent to by January 31st. And then your reporting requirement to the IRS is March 31st.
What do you mean your reporting requirements to the IRS? So when you're saying like,
So okay,
oh, that's
1099,
your taxes.
yep.
Okay.
The 1099, the 1099 is what goes to the contractor. The 1096 goes to the IRS.
Right.
The only way the IRS knows that somebody got a 1099 is because the company sent in a 1096. And on that list, it shows all of the people who got a 1099 from them.
Gotcha.
So, a W-2 in an employment situation goes out to the employee. A W-3 goes out to the IRS. And so that's how the IRS knows that, you know, there was wages reported for this person. So that's the filing that has to hit the IRS by its deadline. It has to get to,
You just said
I
a
believe-
W-3 if it's a LLC. Is that what you're saying?
no, I was saying a W-3 if it's an employee. If it's an employee-employer relationship. So a 1099, 1096 is for independent contractor relationship. W-2,
Oh.
W-3 is for employee-employer relationship.
Gotcha.
Yeah.
Gotcha. Okay, is
Um,
there any like, is there a threshold for independent contractors that people should know?
like what? The amount of money that they can make?
Amount of money to make, any legalities in working with them?
Oh, yeah, it's a lot with that.
Yeah, okay.
But so I want to share a scenario. I did see some questions or some comments pop up in the chat. I want to make sure we're not missing anything.
Okay.
As a partner of the LLC, you can pay yourself through 1099. Yes. To answer Britt's question, you can pay yourself as a salary or a wage, right? Or a contractor fee through a 1099. Now, as it relates to profit and splitting profit, that's something different. But to pay yourself, the 1099 is certainly a vehicle to do that with, or to track it when you do it.
All right, so I'm gonna shut down these scenarios, and then if there are questions, we have about 15 minutes left for the class.
I wanted to say this though, about that other conversation we were having related to independent contractors.
Okay.
I'll share a scenario out with you all that I saw in real time. So there was a person who was an independent contractor, but the company that contracted with this person made a mistake of calling them a contract employee. And just by using the word employee, they implied an employment relationship, so that when the contract was terminated, the person wanted to file for unemployment and they wanted to file a suit for wrongful employee termination. And it turned out that they had a grounds to stand on based on, in writing, the person was referred to as a contract employee.
Whoa.
So in that moment, we started to learn how important it was to like be careful with the language. A person has to be referred to as an independent contractor, and an employee relationship is very different than a contractor relationship, and it comes with different implications and consequences, including people filing for unemployment and other things, because you are an employer versus somebody's providing a contract to a contractor. So but somebody in the legal world could probably come and do a whole presentation on that, because it gets deep. There's steps you have to take in order to ensure that you uphold in the contractor relationship versus the employee relationship. But I think it's sufficient for this discussion to say that it's an area to be very cautious about.
Yeah, great.
I saw a follow-up question from Britt.
There's a few here in the chat. One from Britt and one from Salima.
So it wouldn't be able to be held as a true expense with the taxes, right? I don't know if I understand that statement exactly, Britt. I think, are you saying that they wouldn't be able to use the expense of the contractor as them as a partner in the LLC for the purpose of their taxes. Is that what your question is?
Hey, y'all mind if I just come on here?
No.
Off mute?
Absolutely.
Cool. Thank you so much. Yeah, essentially, so just wondering, like, if you're the owner and you're paying yourself through a 1099, if, like, for example, if I was paying somebody else through a 1099 and then when I was filing my taxes, that would count in theory, correct me if I'm wrong, as an expense, then that would like be reflected on my profit. However, if it's me, myself as an owner, like I'm just not understanding, like, would that translate all the way through as an expense for the organization as like a deduction? It wouldn't, right? Because I'm an owner, I would still have to be paying.
No, it would. You can pay yourself the expense of your labor is an expense of the business, even though you also are a partner in the business. If you're providing labor to the business that costs money that would have to be spent otherwise on someone else, is certainly a valid expense of the business. You don't get into a special category just based on the fact that you're the owner, except for the fact that you can also share profit, but your salary is certainly an expense, even when taxes are not withheld. Okay, cool. Okay, T, you on mute.
Sorry.
All right,
Thank
all right.
you. I was just saying there was one question from Salima up there. What's the best insurance for an LLC? Do you have any insurance recommendations?
So I don't know if I had a right answer to that question, but I would say at a minimum, talk to some insurance providers about general liability insurance. Get at least $1 million policy. And that sounds like a lot of money, but $1 million general liability insurance policy is not a lot of money. It's the minimal coverage that most people will expect from you if you join in an effort, and that requires you to have insurance.
I have a quick question about that. For an entity that has like multiple things going on, and I guess you just gotta talk to an insurance provider, but thinking like Al-Kebalan, right? You got multiple, you got the martial arts, but then you also got gardening, but then you also got, like, are you like, how does that work? But maybe you just gotta talk to it and get a specific quote for all the activities.
So let me just share this. An organization like Al-Kebalan carries a package of insurance of about 40 different policies.
Oh, okay.
And it's all kinds of insurances, directors and officers insurances, errors and omissions insurance, general liability insurance, insurance for the martial arts, insurance for special events, insurance for terrorism, insurance for wrongful conduct with children. Like, there's so many insurances, workers' compensation, and I could just go on and on and on. But the more complex an organization becomes, the more insurance exposures they will have and policies that they will need.
Yeah.
So the insurance companies will be very happy to get to know you and watch you grow like that, so that their bill to you can grow as you grow.
Okay, and then Rachel in the chat says nonprofits definitely want liability insurance to protect the board from fiscal liability, and that's that board.
Yeah, that's directors and officers.
Yeah.
Yep. Along with a bevy of other insurances, like I can't even think of them all. We got a binder this thick at Kebalan Village, which is one of my accounting clients, that, I mean, of all of the insurance every year that they have to carry in order to do all of the different things that they do.
Yeah. Okay, any other questions? We have about 8 minutes until close. If there's questions about specific things, I would definitely say take advantage of this time we have, because Greg is a wealth of information. So feel free to come off of mute or raise your hand or throw it in the chat, whatever you're most comfortable with. But if there aren't any questions, we can say thank you to Greg. Oh, Rachel has a question.
Sorry, Greg, I have one more question for you.
No need to apologize.
So back to that scenario with nonprofits. Can nonprofits accept payment from things like EBT or SNAP or take like other types of benefits as well? Or, yeah,
That's a good question, Rachel. I don't know the right answer to that. And if you share your contact information in the chat with me, I'll get the answer to you.
Mhm. There, we do, and there's a whole process for that. I know a few gardeners who have filed for that. I'm sure you've looked into it, Rachel, a little bit, but I know that
yeah,
we
it's
accept,
process is an understatement.
right, right. It's a whole thing. But we do. We're a nonprofit, and we accept it for our online store. So,
Okay, thank you.
So
mhm.
then that solves that. I know at one point, our Key Line Village did have an EBT card reader. They did not use it as frequently as they thought that they would need to, and so the EBT department or whomever took it back. But I didn't know if it was, I wasn't around when that was established. I didn't know if that was set up specifically for our Cuba line, or was that set up for some for-profit business that was an association? So that's why I said I could get the answer and report back.
Mhm. All right. Well, either y'all are wore out, too much information, or you're about ready to go to bed. And either which way, I do appreciate you guys joining us tonight. And Greg, I cannot tell you how much I appreciate you being in our community to help us through these challenges of forming businesses and doing it the right way. You know, is really, really important. So thank you so much for joining us.
Yeah.
We'll stay on for a couple minutes if there are any other questions, but if not, if you want to come off of mute and say bye, feel free.
So again, I hope that the information that I shared was helpful to you all. And if anybody is interested or needs to contact me further, I'll share my screen again. That sort of has our contact information. There's a website for Unicorn Unlimited Inc. There's my email address, my cell phone number, and the address to our office. And I thank you all for your time and your questions.
All right.
Thank you.
Hey,
This was really
Sarah.
great.
Thank you.
Thank you.
Thanks, Rachel. Thanks, Mom Salima. All right. Thanks so much, Greg.
Seeing everybody.
Yeah. Yep. Greg, this was great. Thanks so much. I'll be in touch. And if you don't know, this is part one of a 4-part series. Our next class is next Monday, and we are going through some accounting, record keeping, and management specifically for farmers. And then Greg will be back. We're going to skip through the holidays, and Greg will be back Monday, December 5th for taxes, a tax clinic for farmers specifically. I'm also, Greg, I talked to Brittany Rooney out at Brightmore. She said she will also join us. She's done some taxes for people in community, specifically related to some of those farmer needs. She's gonna
Nice.
jump on the line as well. So that should be a good one too. So I will, if you guys have also registered for those things, we'll see you in about a week. And it's been real. Peace.
All right, peace.